splitting looks different depending on who the person is. So what do I mean by that? Well, here's an example. So I had one client, very high W-2 income, and we were running projections for him all year. They were going to be using a short-term rental strategy to offset their income. Now they have a portfolio of short-term rentals, so they were very familiar with how this strategy works. And so we were very confident that he was going to be able to use the depreciation to offset his W-2 income. And after a projection, we saw that he was going to get a refund of about $100,000. It was a lot of money. So he went back to his employer, he updated his withholdings, and he was able to take home more cash. He was able to experience higher cash flow. He's able to take that money now and use it to do whatever he wanted with that money instead of giving it to the government and then just receiving it back, almost like an interest-free loan. Especially at $100,000, this was a lot of money. So he updated his withholdings and he got all of that money on his W-2. And now when we went to go and file his tax return, now he's still getting a refund, but it's a much smaller refund. It's around $10,000, and that's much more reasonable for his situation. On the other end of the spectrum, there was another client I was working with previous year. It was my first year working with them, and when we went and did their taxes, they owed a few $100s. Now, for some people, a few $100s may not be a whole lot, but for them, it was actually pretty impactful, and it actually really set them back, and it was a real morale drag. Now, what we did is that we worked with them constantly throughout the year. We optimized their retirement account contributions, and we also had them go in and update their withholdings with their employer, and I also even had them start saving a little bit of money and put it into a high yield savings account. So even that could be a way of how they could start to save just in case our estimates were off and they were earning some interest on that money. However, this turned around and they actually ended up getting a very small refund. It was about $200 or $300, but compared to the previous year where they were paying more like $700 or $800, and we'll work on getting them about 6 to 12 months worth of living expenses saved up in that high yield savings so that they can have it in case they need it for a rainy day.